British Petroleum. BP, also known to the world by its former name British Petroleum, is one of the largest international companies operating in oil and gas sector. The company produces transportation petrol, petrochemicals, lubricants for engines and energy power. BP's business model is constructed on finding oil and gas, extracting it, refining, distributing and transporting, manufacturing products and fuels, marketing and trading. BP's path started from discovering oil in 908 in Persia. Since then, BP went through small and big findings, struggling to succeed but never stopping to progress and researching and discovering. Today, BP operates in around 80 countries with 83,900 employees and is headquartered in London, England. BP's strategy is to be a focused oil and gas company that delivers value over volume. In order to lead to better operational efficiency, BP focuses on safe and reliable operations. According to the latest news, the oil giant accomplished profit of $2.86 billion by the end of the third month of this year. According to the same news, the company generated profits estimated at the rate of 1.3 million an hour. The major direct competitors of the BP and other large multinational companies such as ExxonMobil, Chevron, Tullow Oil, Petrofac and Shell.
Royal Dutch Shell. The company Royal Dutch Shell plc, which is also known as Shell, is an Anglo-Dutch multinational gas and oil company based in the United Kingdom. It operates in three segments: upstream, downstream and corporate. The Royal Dutch Shell Group was created in February 1907 by uniting two rival companies, Royal Dutch Petroleum Company and the Shell Transport and Trading Company Ltd of the United Kingdom. The mission of the Shell Group is to engage efficiently, responsibly and profitably in oil products, gas, chemicals and other selected businesses, and to participate in the search for and development of other sources of energy to meet evolving customers' needs and the world's growing demand for energy. Shell is vertically integrated and is active in every area of the oil and gas industry, including exploration and production, refining, distribution and marketing, petrochemicals, power generation and trading. It has minor renewable energy activities in the form of biofuels and wind. It has operations in over 90 countries, produces around 3.1 million barrels of oil equivalent per day and has 44,000 service stations worldwide. Nowadays, it is the second largest company in the world in terms of revenue and one of the 6 oil and gas supermajors. The company's main competitors are BP plc, ExxonMobil, Chevron and Tullow Oil.
Tullow Oil plc. Tullow Oil plc is a multinational oil and gas exploration company founded in Tullow, Ireland, with its headquarters in London, United Kingdom. It has interests in over 150 licenses across 25 countries with 67 producing fields, and in 2012 produced on average 79,000 barrels of oil equivalent per day. Its largest activities are in Africa and the Atlantic margins, where it has discovered new oil provinces in Ghana, Uganda, Kenya and French Guiana. Tullow's main production comes from 6 countries in Africa, as well as the southern North Sea and Asia. As of 31st December 2012, Tullow had total group reserves and resources of 1 billion barrels of oil equivalent, including commercial reserves of 388 million barrels of oil equivalent. Tullow's 2012 exploration and appraisal drilling success rate was 64%, around double the industry average. This success has been ascribed to its drilling in geological formations similar to those in which oil has been discovered at other locations. For example, the formation of the coast of South America, which is similar to formations in West Africa, Tullow has a primary listing on the London Stock Exchange and is a constituent of the FTSE 100 index. It had a market capitalization of approximately 11 billion as of 3rd April 2013 in the top 40 of the largest members of the FTSE All-Share Index on the London Stock Exchange.
Petrofac Limited. Petrofac Limited is a parent company with a lot of subsidiaries. Petrofac is a global leading oil field company which is set up in London, United Kingdom. The company is situated in oil equipment services distribution industry of oil gas sector. Petrofac aims to attract, develop and retain the very best talent in the industry. Its vision is to be the world's most advanced oilfield services company. It was founded in 1981 in Texas, USA, with 25 workers who develop and produce a model plant. In 1991, Petrofac became an international company such as engineering, procurement and construction business, with an operational center in Sharjah, United Arab Emirates. In 2001, the company opened new office in England and developed beginning level of engineering and designing. Thus, by 2005, Petrofac became a member of the official list of London Stock Exchange. Today, the company has more than 18,000 employees. It provides oil and gas for 29 countries in the world. The company includes 7 business operational units such as Sharjah, Mumbai, Abu Dhabi, etc. The direct competitors of Petrofac Limited are BP, Chevron, Subsea 7CA, Bechtel Corporation, Fluor Corporation, Oil States International Incorporation, Wilbros Group Incorporation. The main motto for business model and strategy is engineering, construction, operation and maintenance, which provides 4 main sectors: engineering and consulting service, onshore engineering construction, offshore projects and operations, training services. The company currently uses 3 principal commercial models: reimbursable service, cost plus key performance indicators, and lump sum turnkey.
Ratios allow us to compare the financial position of companies across different industry sizes and years. One of the several ratios discussed is quick ratio. Quick ratio is used to identify the capability of company to meet its interim obligation with its most current assets. The higher the quick ratio, the likely faster the company will be able to convert its current assets into cash, as closer to their book values. As you can see from the graph below, BP's quick ratio for the last 5 years has never been over 1%. Nonetheless, BP manages to gradually increase its results year by year, as is illustrated on the graph, in contrast to volatile scores of some of its competitors. Royal Dutch Shell's quick ratio was growing up until 2012, when it became 0.74, and then started to decline because the company decided to start a new project, which required a huge amount of investment from the company. As you can see, during past 5 years, Petrofac quick ratio doesn't change significantly. In 2013, the quick ratio increased because of the growth of current assets. In the case with Tullow Oil, quick ratio experienced a shift from 0.92 in 2012 to 1.31 in 2013. Such an increase in quick ratio for Tullow Oil was a result of company's decision to discuss longer payment terms with their vendors.
Dividends per share is the total sum of dividend a stakeholder will get for every share of stock held. The more consistent growth the DPS shows over the years, the more attractive a company is for the investors. BP's DPS reports at 36.42 pence for 2009, a substantial drop to 8.68p in 2010, just like all other indicators in 2010. The chart demonstrates a gradual increase in the following years, which suggests that the company year by year works hard to reach to its previous pace. For Tullow Oil, DPS accounted for 0.2 per share in 2013 and 0.18 in 2012. Despite the fact that the dividend is relatively low, potential investor can easily infer that the investment will be stable enough, as the company's DPS doesn't fluctuate much over years. The potential reason for relatively small growth in the company's stability: usually stable companies don't seek for higher DPS, as it's regularly a characteristic of a short-lasting company. The Royal Dutch Shell DPS in 2009, 2010 and 2011 was 1.64 and started growing for the last years by almost 2.5%, which resulted DPS being 1.72 in 2013. In case with Petrofac, DPS increased by 2.81 during last 5 years. The positive trend in dividend payments is noteworthy since only some companies in the oil well services and equipment industry pay a dividend. Both dividend per share and earnings per share growth ranked in line with the industry average relative to its peers.
Earnings per share ratio serves as an indicator of profitability of a company. From the 5 years EPS ratio of Royal Dutch Shell, we see that in 2011 it had its peak point, resulted from increased net profit. The following years, 2012 and 2013, experienced decrease in EPS because net profit fell. EPS ratio for Tullow Oil was 0.2 per share in 2013, which experienced a substantial decrease of 0.6 units comparing to the last year, with 0.8 per share. Such an impressive drop indicates that the return on each share became low and that the prospective investors will probably not be enchanted by such a low ratio. Since EPS is highly correlated with company's profit, potential explanation for such a decrease in EPS might be general decrease in prices for oil in early 2013. We can also notice a positive EPS trend line in Petrofac, which indicates that the company generates retained earnings. The statement is also supported by change in equity and net income, which is fully reflected by EPS. Petrofac EPS increased by 2.55% during last 5 years. From the ratio of BP, we see that in 2011 it had its peak point, and after that it experienced a significant decrease because it has been recovering from its massive oil spill.
Another important ratio is a debt-to-equity ratio, also known as a risk or leverage referring to entities' liabilities divided by the equity contributed to shareholders. In this sense, Tooil Oil is a good company to invest with a debt-to-equity ratio 0.4 in 2013. Such an index shows that the company has an acceptable amount of debt and it's not so prone to risk in terms of credit rating as those with higher ratios. Unlike with the most of other ratios, in the case with this index, the lower the index, the better is the situation in the company. For Petrofac, one can notice that debt-to-equity ratio significantly increased in 2013 because the company took senior notes loan of $750 million for 5 years. This fact completely changes the proportion of main sources of funding for the company and its debt-to-equity ratio. For BP, debt-to-equity proved to be one of the company's strongest sides. Its ratio has not varied ever since and was relatively steady. For Royal Dutch Shell, as well as BP, is one on a safe side. Its debt-to-equity ratio serves as an example of a good company debt-to-equity ratio. It's neither high nor it varies a lot during the years.
Do you want to invest in my company? Why not? Why?
Thinking about investing in my company?
I think you'll invest in me.
Would you invest in my company? Yay!